Okay, so I know that many of you have a lot of questions when it comes to COT reports. And basically, I tried to make it as simple as possible, okay? As simple as possible, straightforward. And I also basically created here for you guys some simplified reports that you can access basically directly from this page. As you can see, there is a button below this video, and you can access them, and they're already updated. So I basically do all the updating for you guys, and you just get the complete report. Now, I will now show you why these reports are so important. And I will try to do it in the simplest way possible. So, first of all, what are they? So what are they? Basically, they are the reports that the U.S. Commodity Future Trading Commission gives us every week. Okay, every Friday you will get this report, and basically what it shows you are the positions that the commercials and non-commercials have in the market. Now, when it comes to commercials, it means basically all those people that are interested in not really making money in the market. Okay, they're not people that are in for speculation, and they're not in for the profit. Okay, they're in for a lot of other reasons. There are a lot of reasons for which people are basically in the market. I will not go deeper on that because it starts getting a little bit more complicated, but I will try to keep it as simple as possible. So commercials, we're not interested in what they do because they do decisions that are based not on making money. Okay, they're in, for example, for hedging positions, so we're not interested in them. What we are interested in are the non-commercials, because the non-commercials are basically the hedge funds, all those institutions that are in the market to actually make money. And why are we interested in what these guys are actually doing? We're interested in what these guys are actually doing because they actually move the market, because they have the money to move the market. So most of the time, like almost always, the market will move in the direction in which they are positioned. So what are we interested in? So here, this is the homepage of the commitment of traders. So I will go straight ahead showing you which reports you're supposed to be interested in. So as you can see here, we have the first one, which is the one in which we are interested in is current legacy reports. And basically in this section here, the reports are divided into the exchanges that are you're interested in. So we need for our reports the Chicago Mercantile Exchange, and we will decide futures only and short format, and you click on it. Sorry, I will open it in another page. Okay, so we opened the Chicago Mercantile Exchange. Then what you're interested in is the Commodity Exchange Incorporated. Why? Because you will have gold data here. And we will again open it in another tab. And then what we're interested in is the ICE Future US, because we will get the strength, basically the positions that these funds have in the DXY, so basically the dollar index, so the strength of the US dollar. So as you can see, we here, when you open these reports, this is the short version. Okay, the long version is even more scary. Okay, I know that many of you are already scared by this probably, but this is the easy version because this is a short version, and that is enough. Okay, it's what we actually need. So keeping it as simple as possible. Obviously, butter, milk, we're not interested in. What we're interested in are the currencies. So starting from the Russian ruble. So what we see here, let's get one that you actually know better. Let's get, for example, the Canadian dollar. Okay. So as you can see, this is the last report that was basically released. So 5 days ago. And as we have already said, this report is divided between non-commercial and commercial. And we're not interested in, I can't select only this part, but we are not interested in anything that is after this vertical line. So everything that is on the right side of this vertical line, we are not interested in. Okay, so we can I can draw on the screen, but anything above this we're not interested in. We're only interested in non-commercials, long and short. So this number, this number, this number, this number, this number, this number, and we're not even interested in these numbers. Okay, so what you see here are basically the commitments. So how many positions they actually have long and how many they have short. Okay, and you know the contracts are 100,000 CAD. So these are the numbers. Okay, how many longs, how many shorts. Then we have the changes from the last report, and I will go back to this as soon as I finished showing you what this is. So this is the change from the previous report. So how many shorts have been closed or how many longs have been closed or opened. Now in this case, as you can see, we have both minus, meaning that both the longs were reduced. So they closed 8,000 longs and they also closed 8,000 shorts. Okay, and this is the percent of opened positions. So basically, as you can see, overall we have 55,000 longs and 34,000 shorts. Guys, these are the big banks and institutions. Okay, so these orders are big, and as you can see, so we have a 32.7% long and a 20% short. So overall the market has a bullish, basically they have a bullish view on the Canadian dollar. So this is just to simply show you how to read this the report. Okay, this is what you're actually interested in when the report comes out, and you find it on this website here. And okay, so these are the three reports. This is for gold, and it's the exact same concept. Okay, you're only interested in the longs and shorts. These numbers here. You're sending me questions right now. This longs here, this shorts here, the changes, the percents. Okay, and you're not interested in the numbers on how many traders are actually in the market. And then again, this is just for the DXY, the dollar index, to see the strength of the dollar index. And same concept, you're only interested in non-commercials, longs and shorts. So how many positions they change, how many they closed, how many they opened. For example, here you can immediately see that they have opened 1,000 new shorts and they have closed their longs, like a little bit of their longs, but overall you can also see that they're still massively bullish. They still have a lot of longs open. So this is just, it really helps you, gives a lot of insight. I know this is a little bit complicated. I took a lot of time. I decided in the beginning I didn't even want to share this, but because I know that it will be very complicated for basically people that are completely new to the market, but I try to make it the simplest way possible. So this is very important because these are the positions of the people that actually move the market. Now, how have I actually grouped everything? Now, as you can see, this is only one report, but one report is not really, it doesn't really show you much because you need also the past reports. And I have already made a collection of past reports that I will continue basically increasing, and I basically made it in a simplified form, not in the form that I used to have in the past, basically that I use normally. I made it in a simplified form that anyway has only this small, only these numbers here, this one, this one, this one, this one, this one, and this one. So everything as simplified as possible, only the relevant things. And I have it here. So I created this for you guys today, and you can access it directly from the link below. And let's take, for example, euro, okay, just to show you basically how this works. So this is the date of the report, okay? So this is the date of the report. So 12th 10, then you have the week before, the week before, the week before, the week before, the week before. And there is one important thing about these reports in general. And the important thing is this: they cannot close all the positions, okay? They cannot just, people think that if they receive a report and they receive it with 2 times a delay, 2 days delay, like it actually is, then it's not relevant anymore. But it is completely not true, because these people have orders that are so big that there is not the liquidity in the market to actually change their, if for example they want to close their longs, they can't do it. They really cannot do it, because there is not enough money for them to basically close their positions, because as you know, in the market, for every buyer there must be a seller. So if there is no seller, then they can't buy, for example. Okay, so they need to create a liquidity, and the reason for which they have to create the liquidity is the reason for which there are all these manipulations in the market. But put from a very simple perspective, like I did in these reports here, I will now show you how to read them, and then anyway you will learn how to actually implement this to a real chart, because I will start integrating this in every analysis, in every market breakdown that I give to you guys. I will be integrating it with the data, so you can see in real time basically how you're supposed to do it. But first, I really wanted to show you how to actually read the report and how to find them, so that you can do this yourself. And basically, because as you know, my ultimate goal is to make you an independent trader, okay? So not dependent on my report. So that is why I showed you where you have to take the data in order to be able to make your own tables. But obviously you have mine that are updated every week. So directly from the link below this video. So no need for you to actually do them. So here, for example, on the euro, okay, you see the date of the report, the long positions that we said before, how many longs, how many shorts, the change in the longs. So in this case, they added 340 longs, the change in the shorts. So as you can see, they decreased the shorts for 1,000, and the percent of longs and shorts. So there is a 25.5% long and 35.9% short. And as you can see, I have also the report before. So you can basically see that what happened is that they decreased the longs and they decreased also the shorts. So basically this is how the reports actually work. So you see how you can see the changes in the longs, you can see the changes in the shorts that are already summarized for you here. You have the change in percentage, so how many longs there are and how many shorts there are. And this is extremely important, and this is how to read the tables that I give you, and then you will see, I mean, it's quite immediate to understand how you actually have to implement them, because you have information on what they're actually doing. Obviously, if you see market makers adding a massive amount of longs, for example, and closing out all their shorts, then like they did, for example, like they did on gold, for example, like if, for example, you see market makers that add 12,000 longs and close 4,000 shorts, and basically 52% of the market is long, it's quite immediate to understand that you're supposed to be looking for longs. So you will look at the technical analysis already with quite a long view in mind. So I want to now teach you how to integrate this with your technical analysis, but it's very important that if first you actually learn how to use technical analysis alone. Then after you have learned technical analysis, then you can start using also these reports. It's very important for me that you understand first all the rules of the strategies according only the technicals, and then you start incorporating everything also with this.